The Retail Revolution, a comprehensive guide to Walmart Inc., WMT. As of February 17, 2026, Walmart Inc., ticker WMT, is no longer just a big box retailer. It is a $1 trillion global ecosystem that has effectively transformed into a high-tech platform. Following a historic rally where the stock gained over 30% in 2025, Walmart recently became one of the few companies in history to cross the $1 trillion market cap threshold in early February 2026. With its Q4 2026 earnings report scheduled for release in just 2 days, February 19, 2026, the stock is under intense scrutiny. Investors are no longer just looking at how many groceries were sold, but rather how fast is the advertising business growing. This guide explores Walmart's alternative profit flywheel, the critical data to watch for this Thursday, and the valuation risks of a retail giant trading at tech-like multiples. 1. The business model, the alternative profit flywheel. The traditional Walmart story was about thin margins and massive volume. In 2026, the story is about margin expansion through non-retail businesses. The 4 pillars of the new Walmart. Omnichannel Retail. Walmart's physical footprint of 4,600-plus stores is its greatest weapon. Approximately 90% of the U.S. population lives within 10 miles of a Walmart. In 2026, these stores act as automated fulfillment centers for e-commerce, which now accounts for roughly 18% of total net sales. Walmart Connect, advertising. This is the secret weapon. Walmart's global advertising business grew 27% to reach $4.4 billion in the previous year. With gross margins exceeding 70%, these advertising dollars are subsidizing the high costs of same-day delivery. Membership, Walmart Plus. Borrowing a page from Amazon Prime, Walmart Plus has surged to an estimated 28 million members by early 2026. This provides a high-margin, recurring revenue stream and creates stickier customers who spend more per visit. Marketplace and fulfillment. Walmart is opening its logistics pipes to third-party sellers. This allows Walmart to collect fees for shipping and storing other people's products without ever owning the inventory itself, a capital-light model that mirrors Amazon's success. 2. The 2026 Catalyst, agentic AI and automation. If you are following WMT in February 2026, you are witnessing the year of the shopping agent. Sparky and the AI revolution. At CES 2026 last month, Walmart showcased Sparky, its advanced generative AI shopping assistant. Unlike a simple chatbot, Sparky is agentic. It can understand complex parameters like plan a week of gluten-free meals for a family of 4 on a $200 budget and automatically populate the user's cart. Early adoption. Surveys in January 2026 showed that 94% of users found Sparky performed as well as or better than rival AI tools. Efficiency. Behind the scenes, Walmart expects 65% of its stores to be serviced by automated distribution centers by the end of 2026, significantly reducing labor intensity and error rates. 3. The upcoming earnings, February 19, 2026. The market is pricing in a strong beat for the quarter ending January 2026. What to watch for? EPS and revenue. Analysts expect adjusted earnings of 72 to 73 cents per share on revenues of approximately $190 billion. The income demographic shift. Pay close attention to management's comments on upper-income households. In 2025, Walmart gained significant market share from families earning over $100,000 per year who were trading down to save money. If this trend continues in 2026, it signals that Walmart's brand is successfully moving upmarket. FY 2026 guidance. This will be the first time Walmart provides a full-year outlook for the next fiscal year. Any hint that e-commerce growth is slowing below 15% could trigger a sell-off. 4. Financial health, the dividend king status. For income and safety investors, Walmart is a fortress. 51 years of increases. Walmart belongs to the elite Dividend Kings Club. In February 2025, it gave shareholders its largest increase in over a decade, 13%, bringing the annual payout to 94 cents per share. Shareholders' yield. While the dividend yield is relatively modest, around 0.8%, the company is a buyback machine. In the last fiscal year, Walmart repurchased roughly $4.5 billion of its own stock. Cash flow. The company generates over $12 billion in free cash flow annually, giving it the dry powder to acquire tech companies like its recent purchase of Vizio without breaking a sweat. 5. Critical risks. The premium valuation trap. Despite the $1 trillion milestone, there are 2 major red flags for new investors in February 2026. Valuation multiple. WMT is currently trading at a forward PE ratio of 27x. This is massive for a retailer. Historically, Walmart traded closer to 20x or 25x. The market is currently treating it like a tech stock. If Walmart reports a standard retail quarter instead of a tech-driven quarter, the stock could see a 20 to 25% correction to return to its historical average. Tariff and trade policy. As a massive importer, Walmart is highly sensitive to global trade tensions. In early 2026, CEO Doug McMillon warned that higher tariffs will result in higher prices. If new trade barriers are enacted in mid-2026, Walmart will be forced to choose between raising prices, risking customer loyalty, or eating the costs, hurting profit margins. The Amazon grocery fight. Just this month, Amazon opened a 225,000 square foot megastore outside Chicago designed specifically to challenge Walmart's grocery dominance. While Walmart still owns the last mile with its 4,600 stores, Amazon's deeper pockets and physical expansion are a long-term threat. 6. Strategy. How to invest in WMT in 2026.
For a first-time investor, Walmart is currently a core holding at a high price. The core holding rationale: you buy Walmart because you believe it is the only company that can truly compete with Amazon's scale while also owning the physical world. It is a defensive stock that usually performs well even if the economy goes into a recession. The entry strategy: because the stock is at an all-time high and the PE is stretched, the safe way to enter is through dollar cost averaging. Do not buy your entire position on February 18th. Buy 25% now and wait to see how the market reacts to the February 19th earnings. The wait for the reversion play: disciplined value investors might wait for a pullback toward the $115 to $120 range. While you might miss more upside, you protect yourself against the valuation bubble popping if AI excitement cools off. Conclusion: the new era of retail. Walmart in early 2026 is a paradox. It is the oldest, largest retailer in America, yet it is acting like a Silicon Valley disruptor. Its dominance in groceries provides a defensive floor, while its growth in advertising and AI provides a growth ceiling. The verdict: if you are looking for a forever stock that combines a 50-year dividend history with modern AI tailwinds, Walmart is the gold standard. However, you are buying in at a moment of peak optimism. Be prepared for short-term volatility following the February 19th report, but stay focused on the alternative profit flywheel that will likely drive the next decade of growth.